Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today market started with a positive tone. World markets continued its rally. It's been a very extensive rally. It's been for a while now. As far as our markets, we've spoken about two different trends. The trend that's been intact since the June 4th lows, the accelerated trend that's been intact since the August 3rd jobs report that accelerated us and kind of put a little juice behind the move. And then today, lo and behold, we opened through the highs in the SPX of the year and also with the spiders, and then we failed to hold them and we just dribbled lower the majority of the day. There were a few signs with some of the stocks that we've been trading that gave us clues that we might not be able to hold those momentum levels, and what we have now is what I call an outside day. Not an extreme outside day, not a game over outside day, but a day where I know where I entered today long 9 positions and I'm leaving long 3, and actually probably a little net short overnight. Doesn't mean that the move's over, the highs of the year is in, we're going to correct 10, 12, 15%. All it does is mean that we failed to hold momentum. You had a few, bearish looking candles across the board, and if you're an intermediate cash flow trader like myself, you could be cute, you can get rid of some of your longs because we could always maneuver and get back in because we're professionals. That's what we do. If you could maneuver fast and you're in front of your keyboard and that's what you do, you could do it also. If you're a macro investor or, controlled more by intermediate trend, you have nothing to worry about. So if you take a look at the charts, let me show you what I'm talking about. Here's the SPX, okay? I want to show you this was your outside day on the lows. After a nice move lower, after we broke this head and shoulders top pattern, we talked about the move that was about 100 handles to the downside. Here was that neckline, here was the break, blah, blah, blah. This was your reversal. Every time you get a reversal, you never know what it really is going to mean or lead to. And here is your reversal. And what it led to is a powerful move to the upside with commitment holding higher, which then helped lead to what we had as a nice uptrend or accelerated, or not an accelerated, just say an ascending channel, to the upside. Then more recently, on August 3rd, that's what the date is of that jobs report, also combined with after the Monty jawboning that they're going to keep the euro together, you had another move to the upside that actually pretty much ignited another move, to this higher level, pretty much riding this accelerated uptrend. So I've talked about the intermediate uptrend because really this is since June 4th. That's an intermediate trend, and actually that's a trend within a bigger uptrend that's been intact since that October 4th low, because we talked about from the move to the low to the high of the year, the retracement being 50%, showing you continuation to this move, and then we can even go back further, but that's not what I'm talking about. I'm talking about short term. Short term, everyone loves to talk short term. I could trade short term with the best of the business, and here is a small outside day. What that means is we pushed through prior highs, okay, couldn't hold above the momentum level, meaning there were no buyers higher, and sellers took control and closed us near the lows. Now, if you look at this ascending channel or this accelerated ascending channel, the reason why I call it accelerated, because it's on the top end of what has been a bigger ascending channel, it could be in jeopardy of breaking. You look at today's day, you haven't seen a day like that in the last how many sessions? This is just say 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, just say 14 sessions. It's the first one where, you had a breakout failure. So the question is, do we go sideways and hold higher and continue, or do we trade through today's low tomorrow, which is about 1410, and does that accelerated trend change? Because it can. Remember that 7-day tight range? Well, here it is. Comes in right here. If we get a trade or a break below 1410, I don't think that there's anything wrong with a correction down to this 1390, 1394 level. You remember this level, how important it was? Remember we talked about how we had a break above it. Here's 1391. We broke above it, and then we held above it. We built that floor. So at this point, if you look at where we came from and how each time we went to the higher end of the channel, we came back and tested the 8 and 21. Higher end of the channel, tested the 8, 21, even went through it a few times. To this time, we were riding the 8-day, and now when that changes, you got to change. So maybe we come in and test the 21-day, which comes around 1394. I know for me, I'm cute where I could be net short at 1412 make some money from the short side and then cover into this and maybe reposition long into some of the best stocks out there. So from, if you're just a macro trader and you're trying to be involved and stay in a tier system, even ever since this October low or this low, this is not a spot that you need to maneuver much unless you think you could sell some calls and you think that you'll be able to maneuver and get back in if we do hold here. Because a lot of times you sell this, but then forget to buy back and then we go to new highs. But at this point, short term, for me, it got me from 9 positions to 3, and 2 of them happened to be gold and silver. So really, guys on my site were making fun of me. They would call me Red Dog Ship. They would call me Prek the Dog. They would call me all the names of all the bears out there, even though, I've been called a perma bull, which I'm furthest from. I just like to ride the action. And, now the 3 weeks of awesome trading is in the bank. So the bears can't take it away from me because I'm not a pig. Same way on the Twitter sphere this morning, yesterday I sold my Apple. Everyone's like, oh, Apple's going to 700, you sold it, you're missing out. And you know what, maybe I would have. But to ride it for, a week or two from the lower levels of 603 to, 668-ish or wherever it went to, actually I think I got out around 663, it was worth selling. And then today I'm like, listen, if you did not buy the last tradable pattern through 644, you have no right buying 680, 668, even if it goes higher. And lo and behold, went to 675 or 674.80. I'll get to the chart. And then finally we saw a divergence where a lot of guys on my floor made some cute money short. So did I. I sent out a tweet. It was around 671. I'm like kind of running out of gas here. I would sell some. Some guys are shorting versus the highs. And lo and behold, Apple broke. So, I wouldn't say it's game over for Apple, but I was trying to look at the chart of Apple, and I saw two major days where you had a little bit of a reversal. Here was January, February. Wow, I'm really bad with my months. February 15th. January, February. 2 is February, dog. I'm very busy. It's hard to think. So here was an outside day. After a nice earnings run, remember this earnings run? We positioned right here, held the gap, blah, 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 continued. Then you had a big outside day, and everyone called game over. Everyone said, oh, game over, outside day, and that was an ugly candle. But what did it lead to? A down open. Then you had a reversal through that day's low, right here, right? That was a reversal through whatever price that was, 496, and then inched, made new highs, pulled back, and then lo and behold to new highs again. And then this was a different type of outside day, right here. I remember that day very well. It was April 10th. Okay, this is where you reversed, and then I remember the market continued to rally, and Apple did not. And then you had a move lower, and then the earnings gap up, and another move lower. So this led to a pretty sizable correction, right? From the high of 644 all the way down to almost 526. It's 120 points, where this one led to just one day. So anyway, the question is, what type of action do we get thereafter? So for now, you look at Apple, what it did so far is, if I'll get to the micro action, but all it did right now is hold yesterday's gap, 649.90, right there. So this is your new point of reference right here. If we're going to contain this down move, and if this outside day leads to something a lot bigger, it probably doesn't hold 644. 644 is a prior high. You have the 8 day at 642. I think that if Apple is going to be very muted to the downside, it will hold 640 to 642. And if we get there in a day or so, I will be trying to buy this back here. I have no position in Apple. If we go sideways here and we don't break this level, then maybe that's the area. But for now, I do think that this type of day shakes things up and breaks up what has been a great trend to the upside with many tradable points. So with that said, what could you have seen today to help you? Okay, so I want to go to the 5-minute chart in Apple and show you, you could trade this with patterns. All right, here is, the open. Okay, here is it opened up around 660, 669, powered up, gave you a little micro area, and that traded below, and then it had a wedge that formed within the first, I would say an hour to a little bit more, where you had this little rising channel where 670 was the price to short, and then the add-on price was when it went into the gap below, 669, or even this low point, which was right here. So obviously you look at it in hindsight, you're like, wow, it was easy to see because it had an upper little area, broke real quickly, rising little wedge here, broke to the downside. But what I want you to see is right here, okay? This bar right here was at what time? This was 10:30. At 10:30, Apple was around 670-ish. Okay, the high of the day was made at what time was that? The time was, probably within the first, within the first 10 minutes, 5 minutes. This is the first 5 minutes, and then you look right here. This here is about 10:30. So within an hour, you're still, off those highs. So if you come to me for a second, the way I figure out whether or not gaps can get filled is by divergences. And Apple has been leading the market every day for the past few weeks, maybe not every day, but the majority of it. So as you're extended from the 8 and 21 day, as you just had a $60, $70 move, it was worth watching. So all of a sudden at 10:30, I think I tweeted around 10:25, I'm like, Apple seems like it's run out of gas, time to sell some. Some guys are shorting versus the highs. I didn't say I was short, but on my virtual trade floor, guys saw me short for probably about 20 minutes. And then my add-on was when it broke 670, for that move to go negative. And then once it couldn't really rally, you even had a better move going from negative down $4 or $5. And then I think I tweeted when I covered, but whatever. So if you look back at this chart to see the divergence, right here at 10:30, we are well off the highs in Apple. You go to the chart of the spiders, where were we at 10:30? Okay, this was 10:30. This is, look at the time here. This is 10:45. This is 10:40. Here is 10:30. 10:30, the spiders were still on its way up. So here's your open, here's your flag. Okay, this is your way up. This time bar right here is 10:40, so that's not the right one. This one's 10:30. So at 10:30, okay, the spiders were making a new high. This is when you had two little flag type patterns. It broke above this, broke higher. Between 10:30 and 10:40, spiders were still making highs, right? Making highs here. What was Apple doing between 10:30 and 10:40? Apple this was 10:25. So in those same three bars from 10:30 to 10:35 to 10:40, Apple was heading lower, and on those time frame in the spiders, it was heading higher. So just on a quick cocktail napkin type of divergence, I'm just trying to show you without showing you all the other indicators. It gave you its hand saying it's done leading, it's probably a short. And then once it broke 670, you could have shorted it, nice bar. Then once it went into the gap, you had a quick move down, went negative, and then lo and behold, never saw the light of the day, went below this range. First time it tried to bounce, I remember, off of this 660, couldn't even take back a third of what this move was from the highs, gave you continuation to the downside, and then it just became choppy the rest of the day. But lo and behold, the real telltale was this was $5 off the highs, and as the spiders made new highs for about 5 minutes, Apple was getting pressured. So that showed you the divergence there and how you could either got out of your long, because I sold it a day early. People are like, oh, Red Dog, you're early, but who cares? I don't need to pick a top. So if you didn't sell yesterday and you held into today, that was your way out. And the reason why I really sold yesterday is because I was thinking I can get a cute short. I didn't think it would be down $15, but you never have to know what's going to happen if you put yourself in the right position. So anyway, that's the tactical and the longer term picture with Apple and why we maneuvered that way. Now you go to, just real quickly, just to run through some charts, you go to the XLF, I wouldn't say not the ugliest candle, but it tried to break out and came back a little bit, still above the moving averages. Short term, maybe take a little bit off. JP Morgan filled the gap and then came in. A lot of these things hit highs and came in, but it's a summertime, so it's not the ugliest candle, but it's okay. Goldman Sachs did the same thing, maybe a little bit more red because Goldman Sachs just likes to trick everybody. As far as gold and silver, we took them overnight. Gold didn't give you much of a day trade today, but closed okay. See if it could continue. Closed strong yesterday, so it gave you a clue to be long some, which I was because of the action really in silver. Look at this breakout. The good book says take it home, close in the highs. If you did so, you got paid, close off the highs. So we'll see, how much of this gap gets filled. This was the first time in a while also that gold and silver and the spiders moved in different directions. It's typically been market goes up, the metals were going up a bit. Today for the first time markets came in and metals didn't really come in. So let's see what kind of relationship we get here. Traders love relationships, so we need to see if maybe the market does correct a little bit more. Do traders buy gold, and do we get a move because gold's lagged the markets, ever since those lows of the June 4th lows. So anyway, we'll see. As far as some other stocks, Google did come in. At this point, you had a little ascending channel here that broke to the downside. If you were following it close, it's still holding the 8-day. It's still above the 21-day. It still could even come to here and be fine. So we'll see what type of pulling we get in Google. Big move from the lows. First buy area right around here, 610 or 620-ish. So no big deal right there. It's not going to always be a runaway train. Don't love the fact that it couldn't hold the 670 area, but I do think that we're prone for a little bit of corrective type activity. So we'll see if we could buy it back in here. So, August, I think 28th is Jackson Hole. To me, I think we could get a sneaky pull in because it's kind of a little disrespectful. You're going to run the markets to highs of the year and then expect Big Ben to be accommodative and, all of a sudden give you a QE to go along with it to really, smack the market higher. I don't think that they'll get away with it. So maybe a little weakness just in the markets, a little bit of a pullback to put it into the world's in a defensive mode that we need the Fed. I know the Fed's not supposed to be watching the stock market. It's supposed to just be for economic growth, for jobs, blah, blah, blah. We know that they watch the market. So anyway, it would be a little disrespectful to run the market straight to 1430, 1440 and then think the Fed's going to actually do something when, it seems as if we're standing somewhat on our own 2 feet on the hopium, but whatever. So, maybe with that, but now aligned with a technical pattern, because that's what I look for, technical patterns, here you go. This is a spiders. Here's your outside day. And now we'll see if we get a cute move through this accelerated channel down to the 21-day or maybe even down to here. And if that's the case, we can make money there. We don't get caught. We don't hold our nose and go underwater because we're fast and we maneuver. Overall, big move from the lows. Again, you haven't seen a day like this in a while, and even this day when it tried to be red, it was well off the lows. This one's a little bit further down, so just something to take notice to see whether or not we get some kind of continuation and we start closing below 141.35-ish, and could see a move down to 139.75. And for us as active traders, there's cash flow there, and then we'll figure out if this is viable or what the story is. But first, obviously, we have to break through this, and we'll see what happens tomorrow. But very good reason to take off some loose positions, to clean up some excess longs, and for what has been a really nice run since August 3rd. I think everyone who's been trading here in August, a lot of guys in our community, I think this might have been my second best month of the year, or a lot of guys, in my firm or on the floor, came in. July was a little choppy, a little frustrating. Like, wow, August, let's take it easy. And then all of a sudden, you were able to hold 4 to 10 positions for a few weeks, and then especially Apple gave you a lot of easy reasons to hold it. So all of a sudden, you ring the register like we did yesterday, or you take profits like a lot of us did today. No one could take that away from you. No one could come into your bank account and say, okay, you played stocks long for 3 weeks and now we're going to go lower, we're taking that money back. No, they only take the money back if you don't book your profits and you don't know how to tactically maneuver, but that's why you're here getting educated to do so. So with all that said, let's see what happens tomorrow. It's still, coming into late August, volume's thin, and at this point, really taking trades, keeping risk down, not expecting a lot, figuring out what's next, it has been the way to go. And at this point, definitely a day to take notice. That day to take notice gives you clues to keep your eyes open for future action. As of right now, we don't know exactly, but we do think that this accelerated uptrend could break. If it breaks, we see a bit of some corrective type action that I think will be healthy, and then we'll figure out what's next. But at this point, you don't have to know what's next. Just do the right trade, and the right trade was cleaning up some excess longs. Scott Redler, T3 Live, the recap. See you at the morning call tomorrow. Have a great night.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. Really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Come down and expect to have a great time.